I think for the conceptual framework, we really try to think through what is most important to people nowadays. So I think we spent a lot of time in our conceptual framework in 2017 discussing why sustainability disclosure is important. And I think that has already been established. And so now we spend a lot of time discussing where SASB fits in the disclosure landscape. So that's one big thing. We also proposed a revised definition of financial materiality. Another big thing, the scope of financial materiality that we care about at SASB has not changed since 2017, but the language that we use to communicate our definition has changed. So those are big things. We also added transparency as a fundamental tenet. That was not a fundamental tenet before, though it was, it's always been important to us. So nothing there has changed drastically, but that has been added as a fundamental tenet. Jeff, do you want to add anything in here? I see you popped on.
Yeah, well, maybe a couple big picture thoughts would be that these documents have been around for a while. I mean, the most recent version, definitely 2017, but the earlier versions all the way back to 2013, I think. And so they've evolved over time, and part of it is how we talk about the way that we engage in the work that we do, so that people can understand that process. So part of it is around communication, and part of it is also around actually the governance of our activities, as well as the guidance of our thinking, rules of procedure versus conceptual framework. And so, I think a lot of this was meant to communicate more clearly to the marketplace around what we do and why we do it, and that means using some language that's more common today than it was maybe 5-10 years ago, as well as starting to reflect how we fit relative to other standard-setting organizations. If we use a word or a phrase, and most other organizations use a different word or a phrase, we should probably think about whether we should be using the same one. And if we use the same one, we should think about whether we should be using the same one if we actually mean something different by it. And so that's some of what we try to accomplish, is better alignment. We'll see, spoiler alert, that there's still some progress to go in that respect as well. But that's a bit how I think of it, sort of trying to clarify and simplify as well as align.
Yeah, and I guess some of this is a moving target. You look at the incredible evolution of the Group of Five, the alphabet soup, IFRS, this whole global convergence is creating a real momentum that it seems like it's hard for us to even keep up with how we contextualize how we fit into this ecosystem. So.
Well, that's right. And I don't expect this work to ever be done. I teach conceptual frameworks as part of my class, at the university. And one of the things I like to tell my students is that the early thinking on these conceptual frameworks in financial accounting were developed before Star Wars. Just to that's how old it is. It doesn't seem old to you and me, Kurt, but to other people, it seems like very old. But they're continuing to work on it. It's just because, to your point, this is it's a moving target. Conversation, communication needs change over time, and we try to reflect that.
Jeff, I may need to sign up for your course. My lack of understanding of it is obvious. So
you're welcome. We won't tell anybody.
Thanks, Kurt.
All right. Thanks, Giovanni.
All right. So let's dive into public comments. So as I mentioned earlier, the Conceptual Framework and Rules of Procedure 2020 exposure drafts, with all of the revisions that we just talked about, were published on our website for everyone to see and provide feedback on for the latter half of last year. And over the course of the public comment periods, we received 30 comment letters. Everyone who provided comments commented on the Conceptual Framework 2020 exposure draft, and many of those people also provided comments on the Rules of Procedure 2020 exposure draft. Most commenters provided comments that directly responded to many or to all of the 12 questions that we posed in our invitation to comment. And all of the comments that we received can be found on the Conceptual Framework and Rules of Procedure project pages on SASB's website. And I really do encourage people to read through the comment letters on our website, because they are all so thoughtful and they bring such an interesting perspective. So thank you to the investors, the corporations, so many other groups, accounting firms, all associations. and so many others for providing feedback on the conceptual framework and rules of procedure exposure drafts. You all provided such a range of views for us to consider, and there was so much depth in each of your letters, and we really do look forward to discussing each and every one of your comments. But today, rather than going through each comment individually, I do want to provide a summary of the comments that we received. So I'll start by discussing each of the key themes that you see here on the slides, and then I also want to touch upon the comments we received in response to two key invitation to comment questions, one relating to financial materiality and one relating to the characteristics. Jeff, do you have
Yeah, maybe before we jump into the themes, could we talk a little bit about just the number of comment letters that were received and the mix of the comment letters, maybe if going back a slide or so. So 30 comment letters, and maybe just some context around that. I mean, I know that there was targeted outreach as well. Conceptual frameworks are by their nature wonky, and rules of procedure are technical wonky, and so especially so. So I'm not too surprised to see the relative amounts, and if we were to contrast this with the IFRS Foundation's their consultation summary on creating a standards board, they got 500 plus comment letters, which so that's a huge difference in number. But just to put that a bit into context, the IASB wouldn't typically get 500 comments on a conceptual framework public comment period. They might only get 15 or 30 or something like that. So in some sense, they're just different topics, and so we should be thinking about it that way. But I wonder if you could talk a little bit about who we were hoping to hear, in terms of you don't have to get into maybe too many specific organizations, but in terms of the targeted outreach, how do we sort of think about this, and what do we hear back in that respect?
Sure, yeah. So we reached out to a number of different stakeholders that we definitely wanted to hear from. We reached out to the Big Four, to IFAC, to a number of others. Maybe you can fill in the blanks there, Jeff or Brian. But we did hear back from everyone that we reached out to. Some provided off-the-record comments, so we did actually hear back from them, but their comments may not be reflected on our website. But we were really happy with who we heard back from, and it's a pretty even split, as you can see here, between investors and companies. And of course, we will continue to reach out to different groups of people, and so I think this is an ongoing, research in that sense. And so hopefully we can help bring the 20 and 30 closer together, and also hear from more, standard-setting organizations.
Jeff, just a little more to build on that. We always have some priority stakeholders in mind that we really think are experts in a certain topic that we might do some targeted outreach to. And it's fantastic when we get those kind of thoughtful, robust responses from those types of organizations or individuals that are true experts in a certain topic, like the conceptual framework or rules of procedure for that matter. Really importantly, though, and part of the value of doing a public comment period is it's always really exciting for staff and for the board to get a number of comments from other stakeholders that are following the project, that have an interest in the project. And there were quite a number of those as well. So it's just the public transparency, the public nature of the comment period adds a lot of value to our process. I can say with most definitely with confidence that many comments received from folks that we didn't do targeted outreach to add a lot of value to our thinking and bringing forward new options, new ideas. So just the value of that public nature of this part of the process. And then one other comment is that staff is constantly conducting one-on-one consultations really at any phase of a project, and that's to be expected. That's consistent with our objectives of just kind of one of many tactics to kind of broadly build out our understanding, build out our views on any certain subject matter. And just given how influential the conceptual framework and the rules of procedure are for our standard setting process, the board can continue to expect those types of ongoing consultations to continue. One example is when a respondent, an organization that submits a public comment letter, provides a letter, we might have some follow-up consultations with them to really make sure we understand the nature of their comments. we're interpreting them correctly, we're asking follow-up questions, and so forth. So the comment period is, as you know, really important part of our process. And with that said, it's part of the process, but it's not the entirety of the process.
Yeah, I appreciate the context there, and I totally agree with everything that both of you said. You know, in my impression, we had you know, really great, very thoughtful comments that we received, and it wasn't like they came only from one type of respondent, but you know, it came from companies, associations, you know, different firms, the investors, and so and you know, frankly, I was really pleased. It's always great when there is investor engagement, you know, because I think historically in standard setting, it can be difficult to get investors to engage compared to, you know, the firms that are more directly affected by the nature of standards. But we got that feedback. I think that is great, and in particular on conceptual issues, which again you might think of as being more of a wonky topic that might not be of as great interest to some of our stakeholders. But anyway, I appreciate that just as some context for how to interpret the numbers, and I was pretty pleased actually with what we've heard back. So thanks.
Lakewood.
Great, thank you both. All right. So let's talk through these key themes. All right, so the first key theme is support for the revision of the documents and the direction in which these documents are headed. The second key theme that we heard across all of the comments we received is encouragement for further clarity, more structural change, and scope changes. And the third key theme is encouragement for further connection to or alignment with the IASB. So let's dive into each of these themes a bit more. So for the first theme of support, I want to note that no letters we received questioned why SASB is revising the conceptual framework and rules of procedure, and all letters agreed with the general direction in which our revisions are headed. So for example, no one said that they did not understand why we wanted to make our documents more globally applicable. So on this slide, you'll see quotes from the beginnings of Bank of America's and KPMG's comment letters. If you do look through other letters, you'll notice that a lot of them start out like this. There was a lot of support. So this serves as a really helpful and positive feedback for us as an organization. It's especially helpful, I think, to get market confirmation or respondent confirmation on the direction in which these revisions are headed. Now, here's where we get to the constructive feedback. And do keep in mind, these bullets on this slide here are just examples. We received hundreds of other comments that could be showcased on this slide. But overall, the constructive feedback we received can be bucketed into three categories. So there's clarity, there's structural change, and there's scope. When we say clarity, we mean that we received comments asking us to clarify or further detail certain terms or topics. When we say structural change, we mean that respondents asked for topics or terms to be removed from or added to the document. So these are a little larger scale than just clarity related changes. And lastly, scope changes are asking us to reevaluate the scope of certain terms we use or of our processes. So at the top here under clarity, you'll see that we are being asked to further discuss our stance on governance. Under scope, you'll see that we are also being asked to add corporate governance related topics and metrics into our standards. For structural change, it suggested that we exclude transparent as a fundamental tenet, and we remove understandable as a characteristic for metric selection. So Jeff, I'll let you chime in here, and I also want to give everyone a moment to read through these and ask any questions that you may have.
Yeah, thanks, Giovanni. So, so one way to think about, the buckets here is, is through the lens of our due process, because, to the extent that people agree with the change and they're just looking, they have a suggestion for how to word something more clearly, or they have a question around what we mean by something, then, it's relatively easy for us to think about that change, and to the extent that we implement it, confirm that that's what was needed, and not necessarily invoke a ton of due process as a result of doing that change. A structural change is a little trickier because these types of changes tend to be not just a clarification around what we intended previously, but in fact maybe asking us to think about the documents differently, right? Change something in the nature of it. And so, if we decide to make those changes, depending on the magnitude of the structural change that we're looking at, I think that does lend itself to potentially the need to re-expose a document for additional feedback, because with structural changes, it's not always obvious that the feedback that we got could have really commented on or give us, the level of comfort that we would like that this type of change would actually be supported by the marketplace. And so that would require potentially a bit more due process, but still well within the scope of the board's remit. The scope type of questions are the types of questions that we get, and this is like we often get these types of comments regardless of the public comment period, but there are people that want us to do something differently, and that may in fact mean quite big changes to what we're talking about, a fundamental change to our approach, how we do, the process that we use to do standard setting, the way that we try to identify what topics we're going to cover in our standards. Could even be like around changing the mission of the organization in some respects. So, we'll have some time to dive into some of these comments, but fairly big and not necessarily even under the control of the standards board per se, because it might affect actually the organizational structure of SASB and our mission. So just to give some context for those three buckets, and I appreciate you walking through that. Mark, you have a comment, question?
Yeah, Jeff, I agree with the way that you explain it. I was just thinking that some of the comments made on structural change partly also overlap with clarity, because I saw a number of comments being made, like, be very specific on the objective that you have for the conceptual framework versus the objective of the rules of procedure, right? And I think, again, with my maybe IFRS experience in the conceptual framework is there to guide the board on its individual standard setting processes. Whenever you have an individual standard, okay, well, go back to the basic concepts, whereas rules of procedures is much more like the due process handbook, I guess, at the IASB, where you really lay out your the steps that you take in the process and the engagement that stakeholders have with the organization and the process. And I saw some comments made, and I had some sympathy with them, saying sometimes there is a bit of overlap in two of the documents, which I don't know how you would classify that, Jeff, whether you would say that is structural change or whether it is actually just providing more clarity as to the objective and the purpose of both documents.
Yeah, it's an interesting point, Mark. I hadn't really thought of it like this way before, but clearly clarity, structural change, and scope are related, and I think they're like directionally related in that you can clarify without having the other implications, but it's very difficult to have a structural change or a scope change that doesn't sort of embody the categories above it in a sense. So there's a bit of a hierarchy here for sure. And in terms of the documents, if we were to, and we can, I know that there was we asked specifically a question around whether the documents are appropriate and complementary, and so it's definitely something that we're going to be thinking more about. We can certainly comment on some of the feedback that we got on that whenever and however Shivani wants to lead that conversation. But it's a good question, and I think it seems to me a bit more like a structural change of the documents as opposed to maybe a scope change if it's just really about clarifying it. Again, we can get into this a little bit later, but there's definitely a bit of an overlap by design originally, but not necessarily as clear as it could be. And we could certainly address that. Yeah,
and I thought transparency was a good example because it's on the slide here, because transparency is one, obviously, that is a comment about how we conduct our process, right? It's not about the standard itself that you develop. Clearly, that also should add to transparency in the market, but it's a different transparency, I think, that we have in mind here that sees to the process. But anyway, I don't want to go into that detail, but I think it was just to clarify the point I was making.
Yeah. Thanks, Mark. Kurt?
Yeah, on a much more simplistic, maybe some low-hanging fruit, the very bottom comment there really is just asking for our process to be tweaked to have more opportunities for stakeholder engagement. So, and that one almost doesn't fit his scope, I guess. I didn't see the specific on it, Shivani, but it just seems like, you know, there must be some input that people are looking for an easier way to engage with us. And maybe that's before they saw our new and improved website. I don't know.
Sure. That's actually a good segue into how at least staff is thinking about this, is that we have the rules of procedure similar to, as Mark just mentioned, the IASB due process handbook that lays out the very formal steps in due process around what's required in order, or what should be done rather, in order to update a standard. There's going to be a lot more detail underneath that in terms of the specific tactics and processes to execute and really bring that rules of procedure into practice. So one of the questions we want to ask ourselves is what level of detail and what level of clarity is appropriate in the rules of procedure versus that kind of underlying detail that can be really positioned in a way, which we're working on, as you referenced, Kurt, to be helpful to our constituents, to be helpful to companies and investors and subject matter experts in engaging the process. And so I certainly think there might be some more opportunities to improve what is explicitly stated in the rules of procedure. And I think we should also recognize at the outset that there'll be more detail underneath that can be available in the website and other communication and educational materials and so forth. And some of the public comment letters recognize that themselves. They even sometimes suggested additional clarity and then recognized that perhaps that additional clarity is more appropriate in other resources. Again, maybe calling back to the website is just one kind of simple common example.
Yeah, I kind of got a chuckle, Shivani, when you were revealing that this whole issue that half the audience wants more detail and half the audience wants clarity and being very succinct. So it's navigating that balance is the trick, I guess.
Absolutely.
It's like the comments my students give at the end of the semester, right? Some of them want easier exams, some of them want harder exams, and go faster, go slower. It's very difficult, but just a little bit of history too on this. I mentioned that the conceptual framework, first draft of it was back in like 2013, I think, and so I'm pretty somebody could have to fact check me on this, but I think that our first conceptual framework preceded our first rules of procedure, and so in some ways, and the conceptual framework is a more prominent document that people look at, because many standard-setting organizations, many of those framework developers that are out there don't have the same sort of due process that we've tried to implement. We did try to emphasize that early on, and we did it in the conceptual framework. And so a bit of this is that historically we've included a discussion of process along with the concepts because it helps people to understand what we do. And I think what we're hearing now is good questions about whether that's still appropriate and how best to actually, make sure people understand what we do and how we do it and where to find that information.
Yeah, absolutely. Thanks, Jeff. And there's more on that in the appendix, so if we have time, I'll get to that as well. Just trying to advance the slide here. All right. So one thing that I do want to note is most of the clarity and structure and scope related changes that feedback that we received would get us closer to aligning with the IASB, but many respondents explicitly suggested in their comment letters that SASB align more with or connect more to the IASB. So on this slide, you'll see that theme and a sample of comments that we received relating to that. So we received a number of comments asking that SASB's conceptual framework be more aligned with the IASB's conceptual framework. We also received comments asking that SASB's and the IASB's definition of decision useful be aligned, for example. So I'll give you all a moment to read through these and then feel free to ask any questions or share any thoughts that you guys have.
So, I'm just so full of thoughts and comments about conceptual frameworks, but but I think the way I take this is through a couple perspectives, I suppose. But one way to think about this is that there are stakeholders that are representing the financial accounting, traditional corporate governance, a perspective that hasn't necessarily been 5 or 10 years ago really interested in the work that we're doing, and so they're coming into the conversation and very interested in trying to connect back to the perspectives that they're used to, and that makes a lot of sense. And there's been a lot of good work that's been done in financial accounting by the ISB and by the FASB, actually even before that in the U.S. And so I think that's, it's both understandable and I think also appropriate that we try to think about how we're aligning with more traditional ways of thinking about the conceptual framework for financial accounting. I do think that one of the challenges here is that we're trying to accomplish something which is to communicate to all of our stakeholders. And so we do have a lot of people that are interested in sustainability information that aren't necessarily, accounting experts per se. And so may not, that language, one, may not be the language that they're used to hearing either. And so we're trying to bridge a gap here. And I think the other challenge is that that we are trying to do something that is a bit different than what financial accounting standard setters are trying to do as well, where they're thinking about in many cases thinking about the boundaries of financial statements, what's going to go into a statement of financial position, a profit loss statement, and so thinking about things that can be measured in currency units, measured a particular way, and that's important, and they have a good conceptual framework for doing that. Some of those concepts I think are very useful for us, but we also have other things that we're trying to do because we have to capture measurements that aren't going to be easily or even appropriately measured in currency units, for example, and there may be more than one performance metric needed to kind of capture a topic that's of interest. And so I think this is a bit of what we are understanding better as a result of this public comment period, the need to do a better job of connecting what is the same, what can be the same, and maybe where there's some gaps there as well. Lloyd.
Well, and Jeff, maybe you can expand, and Shivani as well, on sort of the practical output of this process will be a document, but it seems like there's a real, almost a slider or a trade-off here. On the one hand, we could write a very short, succinct, SASB-centric document that says, this is what SASB is, this is what SASB does. At the other end, we could write a document that really strives to align well with a multitude. There's this incredible proliferation of standards and statements. And so it seems like we can't do one or the other. We do have to find a middle ground. And you guys have been working this process for a while. And so I'm curious what you've observed and where you're coming down on where do we strike that balance?
I think we'll get into a lot of this with next steps because we do plan to outline some of these larger, perhaps more strategic questions, like with the IFRS consultation, do we want to wait to hear what they've received and to see what they do, or do we want to continue to revise these documents based on that? So we'll definitely be somewhere in the middle, but I think there's so many larger questions that we have yet to answer as an organization. And once we answer those, so in the coming few months, then we'll have a much better sense of where we're landing between those two extremes.
Right, because SASB is changing as well.
Absolutely.
That's right. So I have a thought on that. Mark, I wanted to give you a chance if you wanted to jump in on this or you had something different. Okay, I'm going to take that. I can't hear you. I think you're on mute, but I'll take that hand gesture as being it was maybe something slightly different.
It was slightly different, so I let you respond first to Lloyd.
Excellent. My sign language is actually pretty good, or my body language reading is pretty good. So Lloyd, I think a little about this a little bit through the lens of something we had talked about earlier in the meeting today with respect to the prototype for a climate-related financial disclosure, and how we've been, as part of that Group of Five effort, trying to think about connectivity to traditional financial accounting conceptual frameworks, and that was a process that started after we had already gone through a years of effort on this particular project, and so So that benefited from some of the thinking here, but also from the thinking of the other groups in on that effort. And one way I think about this is that we should probably take a look at that group effort and think about how that can inform what we're doing for SASB specifically. I don't think we just want to I'm not sure it's right or appropriate for us to just sort of plop it into our conceptual framework and say we're the owner of this thing. And currently there isn't really an owner of it. It's a collective effort but not a due process document. And so I think we can think about the extent to which certainly even part of it, like the sustainability half of it, relates to the way that we talk about what we do, and so that if that does end up getting traction, that it ends up being something where people can then clearly see, through that lens of, which is really kind of a diamond where there's some overarching themes at the top that cover any type of disclosure, particularly for the capital markets. And then, if it's going to go into a debit credit system and be part of something denominated in currency units, it's one particular path, and the other side could be more for the activities that relate to things that aren't necessarily assets or liabilities yet, aren't easily measurable in currency units, and think about the concepts that would help that process. And then, the diamond closes with some concepts around a presentation and disclosure. And so, again, could be potentially relatively universal there. So thinking about that structure might help us to write our conceptual framework in a way that would connect better to financial accounting standards others.
So when we talk about harmonization, maybe more conceptual harmonization than necessarily linguistic harmonization, looking for ways to structure this, because we're in this liminal space, we're in between things. And so you sort of have to put one foot down in one area and one in another, and then find a way to integrate it.
Mm-hmm. Yeah, and I think it's non-trivial, both the conceptual and the linguistics aspect of it. I mean, the words matter, and the concepts that sit underneath them matter, and it will shape how we think and how people think of us. So, we have a bit of a challenge ahead of us, but I think it's I'm enthusiastic about the effort.
Thanks. Okay.
Yeah. Yeah, Jeff. My question was more when I read this, I have a lot of sympathy for the alignment with the IASB comments that are coming through. But it also raised a question in my mind when I was reading all this, whether we have a view or whether we should have a view on kind of placement of information, if you know what I mean, right? Because here we say general purpose financial statements. Okay, that's clear. That's very defined. Right, but sustainability reporting can be at very different levels and in different parts of a statement, or could also be a CSR report. It could be in management commentary, and to a certain extent, I think it matters. The alignment as to where you would see this ultimately end up. And I don't know, Shivani, whether comments have been made. I think there were a few comments on this. And I guess this is one of the elements that at least would clarify in my mind a bit, ultimately where you want to go with the alignment as well. Because if you see it as really integrated part, of an integrated report that serves the same audience, right, it may give me a different answer than if it is actually, much more a specific report on CSR, for example. At least in my mind, it could be different.
Yeah. It's a great point, Mark. And I think one of the things that we've certainly that I've noticed as part of this entire process is that traditional financial accounting, because of the format in which those reports are created and who they were originally intended for, there's a lot of overlap in the sense of if you say financial statements, there's implied who is going to be using them. If you say investors, you kind of, financial statements are going to be part of that process. And so there's a bit of a convenience there around the channel, and there's a bit of well understood overlap between the channel and the user, which is, of course, we benefit in that clarity because of all the conceptual work that's been done by the accounting organizations historically. That's just not the thing that we've had in the past with sustainability reporting. And so one of the things that we've focused on a lot over the years is communicating around audience. And we've had a lot of comments and thought over the years as well on location or channel. And And you're exactly right. Like there are more channels for this type of information, and there are more stakeholders. And so, it is a thing for us to be thinking about in our conceptual framework, to what extent we want to be clear around how the concepts relate to not only who, but potentially, where. And we did get some comments and questions about that.
Yeah, and it's also in combination with the IRC merger, right? Where I guess you're thinking about integrated reporting. That provides an extra dimension to think about, probably.
And Mark, I guess just 2 cents on that. I mean, historically, SASB was kind of in a checkmate situation. As we talked about initially, this being a part of financial reporting, there were a lot of concerns about, from the legal side, what goes into the 10K and all of that. And I think, one of the things that really freed this movement was saying we're going to be, agnostic to location. Get the information out, make sure it's credible. And so I would be very hesitant to try to enter that. Although to your point with the IIRC and those other things, there may be convergence, but I think, we made a huge positive step to stop spinning our wheels fighting that battle that it has to be in the 10K or it has to be here. And so at least right now, to me, it feels still premature to force the financial reporting people to embed that in traditional financial reporting.
Right.
And supporting that, echoing and supporting that idea is that we also know that investors look to many more places beyond financial reports to get information to make decisions about how to lend or invest.
Right.
Right. Oh, go ahead, Brian. Yeah.
Sure, just one follow-up observation from spending a lot of time reviewing the comment letters that I don't necessarily want to take for granted. And this is, I think, the direction that you were going, Jeff, is that there was an overwhelming clarity in the responses around the understanding that the investor is the primary user and that the SASB standards are designed to solicit information that are connected to enterprise value creation. And so I think that, well, Mark, that doesn't answer your question in terms of location of disclosures. It's something I don't necessarily want to take for granted, because there is no controversy, as far as I can recall, and no debate around the clarity and the understanding on the investor audience and enterprise value creation. That might even be a segue to the next topic that Shivani has planned here around financial materiality. But Jeff, if you wanted to add anything else on that, go right ahead.
Well, I think of the value of disclosure, from an accounting perspective, I think of this all as being about like accountability. When you start to think about how can information facilitate accountability, you have to answer the question of to whom and for what. And so our conceptual framework has to be crystal clear on those issues of to whom and for what. And I think we've gotten some comments, maybe a few more comments on that. Well, have you got the for what right, or the right way to frame it or talk about it? But Brian, to your point, the to whom has been crystal clear. But to Mark's point as well, like the importance of the location, in some ways can also be thought of as ease of use, usability. It can be thought of as in terms of like the quality of the information that's likely to, the controls that go into it and assurance. And so to that point, like we did get questions also around how we might think about making sure that the information that comes out of using our standards is also of high quality. And so I'm thinking about some of the questions around assurability, for example. And so as I think about the, questions people might have around location, to me, there are also questions around assurability and where and in what ways do we try to make sure that we're providing guidance for those who are implementing our standards and our guidance to be able to produce the type of information that investors need. And so, some of that can come through application guidance. Some of it can come through other, best practices that we might put out there and showcase. But some of it for sure is going to be in the way that we think about what are the types of topics and metrics that are going to lend themselves to high quality disclosure. And so, just to say, like, point well taken, Mark, that we do need to be thinking about not just to whom and for what, but how we can make sure that it's usable and high quality.
Jeff,
do you have a follow-up, Mark?
Go ahead, Mark.
No. I was just going to agree, because that was the point I wanted to make. I didn't want to put it in a certain direction. It's just that we take the topic and think about it, and partly triggered by the fact also that we talked briefly about the European exercise, right? That is actually thinking also about how to structure and where this information needs to come. Right, and I think certainly if SASB centers are going to play a role in that context as well, I think we need to give it thought. That was the only point. Thanks.
Absolutely. Yeah. Thanks, Mark.
Maybe just before we turn to financial materiality on the next slide, Jeff, I'm glad you raised the application guidance, because there were comments received that are not only feedback for us to consider around the conceptual framework, but then more directly around the application guidance, just noting that staff receives so many questions from companies as they're looking to implement the standards or in the process of implementation around these aspects, not just location of disclosures, but more specifically around the governance, internal controls, assurance, and so forth. And so we do take positions in the application guidance, for example, around how disclosures should be, or the controls that oversee disclosures and govern disclosures should be substantially similar to those used for financial reporting. There's an interconnection and interplay here between the conceptual framework and the application guidance, but I think us kind of keeping this theme in mind and trying to be really clear to avoid conflating the two documents, and it's going to be important as we carry forward and think about some of these comments that related to really both the objectives of both different documents.
Yep, absolutely. Thanks, Brian.
All right. Let's get to financial materiality. So, as we were hoping would be the case, we received a number of thoughtful responses regarding our proposed definition of financial materiality. These responses fell into these three main categories. So the first category is that our proposed definition is strong and perhaps could use some further revision, so more clarity related feedback. The second type of feedback we received was that SASB's definition of financial materiality should further align with the IASB's definition of materiality. And currently the definitions encompass the same scope, but SASB would need to reword its definition to align with the IASB's. And lastly, we received a couple of comments stating that we do not need to explicitly define financial materiality from a SASB perspective, because it is already defined by other organizations, or it's alluded to within our objective of being decision useful. Any thoughts here? Any questions? Anything to add, Jeff or Brian?
I've got thoughts. I think materiality is always a big kind of thorny issue. So I'll hold back on my thoughts. I'm curious to hear what Mark and Dan have to say.
Thanks. So yeah, my head was swirling as I was reading through all these comments. This is not my first rodeo with materiality, but it occurs to me, I think the categories that you hit on are pretty well right. They were sort of the same ones that fit in my head. I mean, CCR's letter said, do what TCFD said, recognize that materiality is defined by jurisdiction. EY's letter said you don't need it at all, and I'll get back to that. CalPERS said align with the IASB, and PwC said align with either the FASB or the IASB. Note that the FASB and the IASB don't align today. They did, and then the FASB changed it. So this is not, there's also a great document on the Corporate Reporting Dialogue site that puts all the different people's definitions of materiality together. But what this it made me sort of step back and question all of this and what our objective is in using materiality and why. And this, Jeff, goes back to your comment on the last slide, which is, should this be different from financial reporting? And if so, why? And I wonder, because in financial reporting, the standard setters prescribe a standard, not using materiality, but they prescribe a standard, and the entities, the issuers, actually you look at materiality on an entity-specific basis, using their own facts and circumstances to decide whether that is material for them and whether to respond to it or to include it in their financial statements. We use materiality completely differently, as a filter of the 100 or 200 ESG issues, which ones are the ones that we think are going to be more relevant in each particular sector. That's a very different use in my mind of materiality, and we use the same word, and I'm not sure, you know, so it just causes me to step back and really question, what's the objective? Is the objective the same, and therefore is alignment right? Should we not use it when other people are using it? So honestly, this raised more questions to me than solutions. I mean, there were a lot of solutions, but it raised a lot of questions to me, fundamental questions.
There's great points, Mark, and this sort of echoes back to the point I was making earlier, that like there are times where we use different words and we should use the same one, and there are times where we use the same word but we actually may mean something different. And so we have historically focused on aspects of like talking about financial materiality because we're trying to bring people along in this conversation around what we are not referring to and what we are referring to. But you're exactly right that we use this approach to sort of filter the universe of possible issues that we could talk about. And so it is a challenge. We do acknowledge that materiality at the end of the day is a function of regional jurisdictions and is not only entity specific, but it's item specific, right? Like it's situation specific. And so we're not claiming that that's not the case. And
no, but that's driving in part the variety of responses that you get, because the perspectives that are coming from people who use the materiality in the way that they use materiality. So that's partly why you get this wide variety of people's opinions about how we should be defining it when we're not necessarily doing the same thing that they're trying to do, even though we do acknowledge that that is different.
Yep, it's a great point. Yeah, we don't use relevance. Which the financial accounting standard setters do focus on. He's like, we're going to focus on what's relevant, and then materiality will play into whether or not you actually have to kind of comply with the rule in a sense. But I don't think we had the ability, probably historically, to just say relevant and have people know that what we meant was something that relates to financially material sustainability information. Whether we're there yet or not, I think this is certainly part of what the conversation's going to have to be, and I'll be curious, like what the board opinion happens to be about this, individual opinions, and as we dig through this, it's a big important question. Dan, you've been hanging out here for a little while, so I do want to make sure you get a chance to chime in.
Oh well, yeah. I was thinking, in some ways, you and Mark covered the point that I wanted to make in your dialogue just now. It seems to me that we have to have a concept of materiality. I mean, you guys used the word filter. I was going to say a yardstick, but our staff and our board need some way of measuring possible disclosure topics to determine whether they're material in our context, particularly because we operate in a world where there's double materiality and other concepts of what could be material. But at the same time, we've always explicitly recognized that companies have to decide for themselves what's material when they're applying our standards in their disclosures. And that may well be influenced by the regulatory climate that they operate in. So I mean, kind of my reaction to these comments about you don't need a definition of materiality is that while they're certainly phrased as something structural, maybe we need to address them through more clarity and emphasizing the fact that we can't dictate to companies what's material for them, but we have to have a filter, a yardstick, a strainer, whatever you want to call it, to determine what we're going to put in our standards and what we aren't.
Yep. Mark?
Yeah, my comment was actually very similar to Dan's, but I must say that concept, which I think saw back in the comment letters from CalPERS and ICGN, in kind of this hierarchy of we determining what is financially material from a standard settings perspective, and then the company still deciding whether they comply or not, depending on how material it is for them, is not a notion that I had picked up clearly from reading the conceptual framework. And so maybe it is something that needs some further clarification. For sure.
Just on that, like we do say that we try to identify topics that are reasonably likely to be financially material in a given industry, and so that is trying to acknowledge that it's industry, like that it's situation specific, but that given the nature of business, there are going to be topics that are more likely the sort of thing that an investor would want to know about. That could, it might be expected that this is the sort of thing that a company might be doing. And even if you aren't engaged in this sort of activity, in my view, sometimes that's still decision useful for an investor to be able to say, oh, well, this is one company that stands out in an industry is not facing those types of issues. So I actually think decision useful information relates sometimes to something that's not necessarily material from a company operations perspective, because it's sort of suggesting that they are not engaged in an activity that other firms might reasonably be, peer companies might reasonably be engaged in.
Yeah, I had two more points, if I may, and sorry, and then I'll step down a bit because I'm speaking a lot today. But the other point that I picked up on from reading the comment letters was, I think, a request for explaining more of the double materiality concept, even though we're not on the other side of the materiality. But I thought, especially if you look at the climate related disclosure paper that the five, including us, developed, there's an excellent explanation of, I think, how at least the dynamic materiality works. And didn't see it here with Shivani for sure. I think that's something that we probably need to take into account, whether there is something to be said there. Because that was
especially true if, to the extent that we settle on concepts in a way to articulate them, then it's likely to have a longer shelf life in a sense. And this conversation has moved so quickly that I do kind of wonder if there's going to be a better phrase for a similar concept in 3 to 6 months. And I don't if so, we want to be a little bit careful around things that aren't inside of our scope, so we don't define them, but that people talk about them. But I totally take the point that it can be very helpful for scoping what we do by comparing it to what we don't do.
I think, at least what I've heard, Jeff, that there is also in Europe quite sometimes a misunderstanding of exactly what it is that we cover, which is more than people give us credit for. And I think that's why I think it is important to kind of have that whole spectrum. And I at least found this very useful. And the last point I was going to make or ask, I thought there was, in similar vein as Mark, I think the head starts spinning when you see all the different opinions. Probably it needs some further paper that develops the pros and cons of the different approaches that are being suggested, because I don't think there was a kind of a one prevailing view on materiality. So maybe that's something that we will see. I don't know how the process works, but that we may see back at the board at some point.
Absolutely. We still have a lot more to do in terms of synthesizing, digesting, distilling the feedback that we've gotten. Brian, just to give you, were you going to jump in on something that Mark said?
Yeah, I was going to ask kind of a dumb question of how far apart is our definition from IASB's? Is that a big leap, or what's the essence of the difference?
No, I think the definition for materiality is not that different from what the IASB uses. I do think that, and this goes back to the conversation with Mark Siegel, that they have one paragraph or so on on materiality. They don't use the term financial, but they have one paragraph of materiality in their relevance section. But relevance is the primary characteristic that they're really focused on, and so that, I think, I actually take that as being like the bigger disconnects to aligning with the IASB, which also I think is kind of the bigger point than this and what's on the slide right here. So
great, thanks.
And Kurt, that was explicitly acknowledged in a number of the responses as well, in terms of how we drew heavily from the IASB definition. But with that said, I think, short of diving into it here in this discussion, I think one of the topics for the board to really keep thinking about is around how our definition of financial materiality is very much based on the concept of enterprise value. And I think that's maybe even what you were starting to get at a little bit earlier, Jeff, and that that can potentially create some more options in terms of how we could think about approaching this and structuring this in the conceptual framework. By acknowledging that, really what we're getting at here, what we really want to understand is enterprise value creation and destruction. And we think of financial materiality as a concept, as a useful concept for the staff and the board to think about in this, what you referred to as filtering, but really underneath that, or kind of a step further than that, is enterprise value creation. So no immediate solutions there. I just think that that's going to be part of, probably part of the solution, and how we can keep continuing the conceptual framework forward to make sure that we're clear.
Awesome. Thank you all. How are we doing on time? Should I go into characteristics, or would you prefer if I jump to next steps? Jeff?
Brian, do you have a view?
I think we can take a couple minutes on characteristics, and then I don't think we should spend more than 5 to 10 minutes before shifting over to the infrastructure agenda item.
Perfect. Sounds good. There we go. All right, characteristics. So again, received a range of feedback for characteristics. Unsurprisingly, we received a lot of feedback on individual characteristics that respondents felt should be revised or removed, or in the case of distributed, reintroduced. But most of the feedback that we received can be bucketed into the following 3 categories. So the first category asked that SASB provide transparency into the hierarchy of characteristics. The second category asks that we remove all topic characteristics because they may be redundant given our fundamental tenets. And the third category asks SASB's characteristics to further align with those of the IASB. So Jeff, anything to add here? And again, I'll give everyone a moment to read through these and ask any questions.
Yeah, so, I think this is, we've got a lot to digest here, so I don't think we're going to have any really obvious takeaways. But, I do think of this as being through 2 lenses. One is the lens of how it helps us to communicate what we do, but then also going back and relying on feedback that we've gotten from the staff over time in terms of how this actually helps the staff to execute on what we ask. What we ask of you, and so I think it should be informed by all of that, and the nature of what we do is, again, it is a bit different than what we see in financial accounting. So it's really going to be, I think, trying to balance both of those perspectives, making sure we can connect with all of our audiences, but also have the type of guidance that we need to execute on our work. There is a hierarchical nature to this conceptual framework, and so it's true we could emphasize more the things at the very top and just sort of leave it, without going on and on at finer levels. But to the extent that helps people understand what we do, or it helps the staff to execute on the process, then I actually think it's really important that we don't lose that clarity. We should think about what aspects of that do make sense, and sometimes we need certain concepts somewhere, and I think it's just a question of where is most appropriate. Are we talking about characteristics of information? Are we talking about something that relates more to the process? Are we talking about something that relates more to the outcome? And I think as long as we think carefully about those broad types of buckets and questions, we'll be able to digest this information and see where there are essentially opportunities to improve further the document as we've over and above what we've already done to sort of move it forward.
Thanks, Jeff. Yeah, definitely a lot to think about. All right. So as far as next steps are concerned, so the SASB staff and standards board members have several moving parts. So we, as we mentioned earlier, want to continue the analysis of all comments. We want to follow up with respondents if we have any clarifying questions regarding their comment letters. We want to engage foundation board members in the discussion of topics related to the mission or to scope changes. We want to reconnect as a project team to establish an effective project plan moving forward. We also want to establish a list of open questions, including questions like how SASB's objectives have changed since these projects first began, and we want to facilitate discussions to answer those questions. Over the course of the past year or so much has changed in the sustainability disclosure landscape, and there have been some organizational changes with SASB's merger with the IIRC. So we feel that taking a step back and discussing some of these larger topics while also considering each and every comment that we received will ensure that we have an appropriate and effective project plan moving forward. Elizabeth, question or comment on next steps?
Yeah, a number of people said that reading the comments just sort of made their head spin, and I felt the same way. But first, let me just say, appreciate all the comments. It was really amazing to see the amount of feedback that we got. So good job in getting that feedback, and thanks for everybody who did that. But, I think what we see is a reflection of materiality in the ESG world broadly, right? Like the whole community is really struggling around this concept of materiality. And to Jeff's point, and this is something I talk about all the time, people using the same terms to mean something different and different terms to mean the same thing. And it's like, coming up with a true North Star in that context is just always going to be challenging. And so I think it's explicitly built in here in terms of your near-term activities, but I think engagement and understanding of all of the other organizations that are focused on this right now obviously needs to be a part of it. You've already mentioned some of them, but I think making sure we are understanding how we're the same or different from all of these other definitions will be really important, so that when we finalize our definition, and I have strong feelings on that, we can react to how it's different from others and why we chose that pathway. I think that'll be an important piece of the analysis.
Thanks,
thanks, Elizabeth. Yeah, totally agree. Really good points there. And actually, we do have, and a part of it is going to be in the project plan to re-engage on some of what we've heard back to make sure that we understood it correctly, and whether there's a way that we could find a middle ground that would actually be viewed as being helpful. But it just reminds me, and this goes back to a little bit like the project, the path to get to where we are. I mean, one reason that I think we got the high quality letters that we did get was in part, I want to give credit to Shivani and Brian and the team for setting up, webinars, consultations, spending time on the phone, walking organizations through what we do, why we do it, and helping them to understand it so that they could then, digest that and give us feedback on what they think of that. And so, it's been a process. It's going to remain a big process to continue on with, but definitely big props to Shivani and the team for getting us at least to this point so far.
Any other thoughts on next steps? If not, I just want to thank you all for your time today. Thanks for a great discussion, Standards Board. For those in the audience, please feel free to visit the Conceptual Framework and Rules of Procedure project pages for more information on the projects. Also, please feel free to reach out to me. My email's on this slide. And thank you all again.
Thanks, Shivani. As anticipated, we have a lot to continue to digest in this respect, and a lot of work to do, but look forward to the progress that we're going to be making in that respect. And thanks for your efforts on this.
Absolutely. Thank you.
Okay, we're now up to the second discussion item for this second session of the day. So if we've got Will with us, we can go ahead and move to the next slide. And looks like,
hey, Jeff.
There we go. Hey, Will, how are you?
Doing all right, thanks. How are you?
Great. Thanks for joining us today. Looking forward to the discussion.
Yeah, well, thanks for the opportunity to address the board. Looking forward to this. So really just wanted to kick off and say today's session, we'd like to provide an overview of staff's research that was included in the staff memo to the board on 3 early stage research opportunities in the infrastructure sector. The staff believes there are potential priority issues based on preliminary research and consultation, and really to understand the board's interest in and questions on these opportunities as staff considers future project development. Now, staff is not asking the board today to make a project decision, nor are we looking to the board to make a prioritization decision. Really just trying to understand at this stage what the board's thoughts are on these opportunities, any concerns that the board may have, and how staff should really focus on research going forward and the opportunities that the board may be interested in pursuing. So next, just want to quickly highlight some of the opportunities we'll be discussing. And so the first opportunities, 2 opportunities that you see here relate to considerations around internationalization of the standards. while the third opportunity relates to an emerging issue that staff has been monitoring over the past few years. Those opportunities are first on renewable energy policies and electric utilities, second on the incorporation of end-use efficiency into business models of electric, gas, and water utilities, and third on healthy buildings and real estate. We'll then quickly recap and we can go over next steps. Now, staff would like to address each opportunity individually. Staff will provide a brief background on the opportunity and then would like to leave the majority of time that we have for board discussion. So why are we discussing some of these issues today? And really the reasons behind that, staff has received and collected market feedback, reviewed related literature and publications, and analyzed SASB disclosures to understand these opportunities, all of which indicate that there may be some concerns that could be potentially addressed. Now, before we get into the individual opportunities, I just wanted to ask if there are any questions on our objectives or the structure of this session. Okay, hearing none, let's go ahead and let's begin with our first opportunity on renewable energy policies in electric utilities. So in the electric utility standard, the greenhouse gas emissions and energy resource planning topic states that companies in this industry can reduce greenhouse gas emissions from electricity generation, mainly through careful planning of their infrastructure investments to ensure an energy mix capable of meeting the emissions requirements set forth by regulations and by implementing industry-leading technologies and processes. Now, within this disclosure topic, the accounting metric that you see here measures a company's regulatory risk as it relates to fulfillment of renewable portfolio standards. And real quickly here, a renewable portfolio standard is a policy mechanism to increase energy production from renewable sources. Now, staff has received feedback from several companies and industry groups in countries in Asia and Europe without renewable portfolio standards that this specific metric does not apply and indicated that this metric may lack an international focus. Staff would like to note that other industries outside infrastructure also include references to renewable portfolio standards, and there may be opportunities to consider globally applicable terminology as well. Now, this disclosure topic may therefore not complete a complete set of metrics. The different renewable energy policies have been implemented globally, such as feed-in tariffs. And according to one source, 143 countries have some form of renewable energy policy in place, but not all have implemented renewable portfolio standards. Additionally, there's also a high emission rate in SASB disclosures by non-US companies on this metric on renewable portfolio standards. So we're thinking about this feedback and the research that we've done. What are some of the things that we could consider here? And so staff is considering investigating different renewable energy policy mechanisms to determine how to improve the completeness of the metric in this disclosure topic. Staff would really like to better understand how this information is being used in decision-making by users. Now, staff sees advantages to doing this by improving the global applicability of the standard, by addressing the high prevalence of renewable energy policies globally, and by narrowing the focus to renewable energy policies compared to broader themes within the disclosure topic or the industry standard itself, it may be possible to accomplish the project with a faster timeline and to address market feedback. Now, on the flip side, of course, thinking about some drawbacks that this may entail, staff would like to point out that there may be more fundamental issues with the industry standard related to underlying sustainability issues that could be overlooked by focusing solely on renewable energy policies. Now, there may be broader business resiliency issues connected to renewable energy and business strategy that would be outside this potential scope. Further, the structure of the industry as scoped in the standard may be a point of consideration as it relates to the type of regulatory environment in which a utility operates, essentially thinking about here differences in regulated and deregulated markets. Additionally, this may impact capacity depending on the avenue taken to address this, may require periodic reassessments as renewable energy policies evolve and change globally, leading to a potential ongoing need of staff and board's time. Now, having gone over this opportunity, staff would like to now pose a few questions to the board. And really, staff is seeking the board's input on their views on the research collected to date, as explained in the staff memo to the board, any concerns that the board may have in pursuing this early stage research opportunity, especially considering the potential scope, as well as how staff should focus research and consultation going forward for a potential possible project on this. So I'd like to turn it over to any questions or comments the board may have here.
Thanks, Will. I'll kick off. So I'm supportive of this project. I liked your presentation. I like the focus on the global applicability improvement and focus on a climate metric, which is very much in demand and supportive of interest. And I could really see how this could enable companies to better meet their goals for TCFD aligned reporting with providing more applicable and useful metrics for global companies. You pointed out the number one concern here, which is the ability for the metric to be sufficiently inclusive of something that's continuously evolving, and not just in one jurisdiction, but in multiple jurisdictions and potentially across federations or constituent states or provinces. So my question for you, Will, is do we have an example from another industry where we've created a metric or designed a group of metrics that has that flexibility built in? I personally don't love the idea of periodic projects constantly coming back to the board to be updated when, China gets a new policy or Denmark gets a new policy that's different from the EU. I'm making things up here.
Yeah, thanks, Verity. No, I think that's a very valid question that we definitely need to consider in pursuing this if we decide to do that. And looking at the solar technology industry, there we have a descriptive metric that essentially asks about risk and opportunities related to energy policy. And so that leaves sort of this broad opportunity to report on how any number of different policies may be creating these opportunities or risk to a solar technology developer. So that could be maybe a model that we might want to consider and thinking about moving forward with this. I think we'd have to balance that with trying to understand the decision usefulness of that and really ensuring that we're including elements there that may be important enough. Maybe there are quantitative measures that are important to include in this. So I think that would be something really interesting to think about and pursue.
Brian, were you going to jump in on that?
I'll just maybe very briefly share one other example. Thinking about the hazardous waste topic that we have in a number of industries, including a specific metric on hazardous waste. We have the concept there of hazardous waste, or in the metric specifically hazardous waste generated. And sometimes it gets into amounts recycled as well. We did engage a lot with the board in the past around revising, really shifting that definition of the term up a level to be flexible based on the jurisdiction that the company operates in, and we got comfortable with that. Now that's a little bit of a different situation here because it was about jurisdictional flexibility in defining a specific term. Here, I think what we might be thinking about is something more along the lines of what's the kind of higher level principle that sits above renewable portfolio standards that could then capture a range of policy mechanisms. So it's a little bit more challenging, but maybe, and Will, if you have any further thoughts on this, maybe there's an opportunity to establish, clear principle around the kind of range of policy mechanisms that are used in the world that can still lead to that kind of comparable, useful data, which is one of the concerns we just want to have in mind when we're elevating a level to more of a principle.
Yeah, thanks, Brad. I think fully, I think we need to peel back the layers of the onion a bit on these different policy mechanisms, understand the landscape, what's going on. It's continually evolving. Policies are phased in, phased out. And so really trying to understand, as you were saying, the principles of these and what they aim to achieve and looking for those commonalities across those.
Well, this is Bob. I might chime in here. So first of all, in terms of interest, I think this is a good topic to pursue in the view that, the technology within this sector and industry is changing rather rapidly. And therefore, as those change, certain things become more important. So I think we should continue to look at this. So it's a good topic. I think number two, Brian's comment is good on, are there some stand back base metrics, regardless of wherever you are, that can be universally applicable. But I also think when you talk about regulation and policy mechanisms and our goal to try to, be all things to all people in every country of the world, I think a convention we've used in a couple of the other industries is using the term regional equivalence So I know we started out with some U.S. wording and some U.S. regulations in some industries, and we said, well, you could use that U.S. metric or you could use a regional equivalent. So I think as we look at that, what that lets everybody do is properly report what they're supposed to or what they have to report given their jurisdiction. And then thirdly, in terms of activities I think we can undertake, obviously the typical investor and issuer input, we want to continue to seek that, and the calls that you've had and other analysts have had are really good. But also this is an industry where there are, I think, some powerful and well-organized industry associations in the U.S. and beyond in other countries. So I think as you begin to look at you're formulating your plan as you go, who to reach out to, that we'd look at some of those large industry associations as well. Thanks.
Yeah, thanks, Bob. Wholeheartedly agree with that, and definitely appreciate that.
Yep, Mark, do you want to jump in?
Yeah, I had a question for my own understanding, and I apologize up front for asking sometimes maybe simple questions that I ought to know, but I'm new, so I hope I'm granted. How does this practice? So I think it's a project that really tries to internationalize, I think, what you've got in the standard at the moment, as I understand it, right? How does this project then relate to the internationalization project, was my question. Does that mean that the internationalization project is broken down in smaller ones like this? Or that was, I think, the overall question that I had. Or is the internationalization project one project?
Yeah, thanks, Mark. I'll take a quick stab at it, and then Brian or Jeff, if you want to jump in there and provide any additional detail. But this is, a subset. It's been something that has been identified as an output of that project, as an area to consider in addition to the feedback that we've heard from disclosures. So it's, coming out of that larger undertaking there, as in addition to the feedback.
One way to think about it is that internationalization project, Mark, is really an earlier stage project that did a very comprehensive assessment across the entire range of the standards. Now this, what Will is presenting and speaking on here, was one of the many opportunities identified in that project. And so this is our considerations around carrying it forward, potentially in the direction more of a kind of formal standard setting capacity.
Right. No, very, very supportive of, certainly internationalizing, but it helps in my understanding. Thank you very much.
Thanks, Mark.
Great, thanks. Yep. Well, I think we can go on to maybe the next opportunity.
Yeah, great. Thanks, Jeff. Just to quickly recap here, just continually staff hears from the board that generally supportive of pursuing this idea further. We'll consider other industries in terms of how they may potentially have addressed something similar. Of course, considering regional equivalency, principles-based approach, and thinking about that, how we move forward, and continuing to engage with the market, in particular industry organizations as well. So thank you for the input on that one. So we can move on to our next topic here on the incorporation of end-use efficiency into business models of utilities. And so now within electric, gas, and water utilities, they can partake in a wide range of activities to promote energy or water efficiency and conservation among their customers, such as offering rebates for energy efficient appliances or offering incentives to customers to curb electricity use during times of peak demand. Now within the end-use efficiency disclosure topic, the accounting metrics that you see here measure the extent to which an entity is subject to decoupling policies. Now, decoupling is a form of alternative rate design that essentially decouples utility revenues from consumer consumption, and may also build in explicit incentives for end-use efficiency. Now, similarly here, staff has received feedback from several companies and industry groups, largely within electric utilities, countries in Asia and Europe without these decoupling policies, that this specific metric does not apply, and indicated that this metric may have a stronger US focus. Now, this disclosure topic, therefore, may not contain a complete set of metrics. Besides decoupling, there are other approaches to incorporate end-use efficiency into utilities business models. Similarly here as well, we've seen a high emission rate in SASB disclosures by non-US companies on this metric. And so thinking about this, what is one way that we may want to consider moving forward on this topic? And the potential idea here, staff is considering investigating different approaches implemented globally to incorporate this end-use efficiency into business models of utilities, really to determine, how to improve the completeness of the metrics that we have in this disclosure topic. And so the advantages, similarly here to the first opportunity staff sees, are related to global applicability, addressing the likely high prevalence of these different approaches globally, and similarly here, narrowing the focus simply to these approaches may help to speed up, allow for a faster accomplishment of this project, and address market feedback. Similarly here as well, thinking about this, staff would like to point out that there may be more fundamental issues with the industry standard that could be overlooked by simply focusing more narrowly on these types of approaches, and that the regulatory complexity really here could suggest that other scoping options may be more adequately addressing some of the underlying issues that we're seeing here with this. Again, thinking about regulated and deregulated utilities, also acknowledging here the complexity and variation and approach that could exist to the incorporation of these end-use efficiency approaches is a broader undertaking in and of itself, despite the intended narrow scope of this. And so this could also impact the timeliness of a proposed solution and staff's capacity as well. And so having gone over this opportunity, we'd like to pose the same set of questions to the board to see what their input is in terms of the research collected to date, any concerns, and focus going forward on this. Lloyd, I see you.
Yeah, well, maybe if you could maybe clarify a little further. It seems from a financial or an investment perspective, you really want to know where a company stands with respect to energy efficiency, almost regardless of how they generate the efficiency. So one utility might decide to build a bunch of solar plant. Another company might decide to outsource the solar plant. So if the choice is narrow scope or broad scope, it just seems to me the instinct should be to go broader scope so that so the investors can see the whole picture, and that utilities probably should be thinking about it that way, that they should be not worried quite so much about how do we look on this one metric, but what does our overall business mix look like? So I guess that's where my sentiment is anyway.
Thanks, Lloyd. Yeah, that's helpful. Definitely, issues that we can continue to think about and debate as we move forward and collect more research on this.
I might just add in really quick, Lloyd. A lot of our consultations in the past with companies within the industry, including some of the major industry associations, EEI, for example, that Bob referenced earlier, have been about kind of the competing kind of trade-offs among sustainability issues within the industry, especially when you include issues like affordability, which is a topic within the industry. So when we think as directly as possible about this topic that Will is bringing forward, this end-use efficiency topic around how regulated utilities are just working with regulators to design their rate structures to improve resilience, improve cost of capital and so forth in the face of increasing energy efficiency. It's really completely impossible to not think about that in the context of also the GHG emissions disclosure topic. And I think that's part of what you're getting at here, just how interrelated these sustainability issues are. I think that can, that doesn't necessarily have to prevent us from focusing on like a single metric for improving, international applicability, for example. But your point is a really good one, that everything within this industry is very, very interrelated.
Yeah.
Well, and nobody loses if you can, in an economic way, make your utility more efficient. Customers can get lower prices. It's probably environmentally better. And investors like efficient utilities better than inefficient ones. So in the end, I think all the incentives point in the same direction, but it would be a mistake to myopically focus on just one spoke of that wheel.
Yeah, this one to me is a little more troublesome. I think the first one where we're talking about, the mix of capacity and the resilience and those things, that's really how do you produce and what's your exposure or benefit of your mix of the energy. This one really is getting into your pricing mechanism. And so it's at the other end of the funnel. And are you building pricing practices that encourage conservation or off-peak use in those things? And my worry here is, there may be different measures, RPSs or whatever on the supply side, but at least you've got kind of a single structure of what is the sourcing and mix of your power. This one, it seems like, would be even more diverse and more impacted by company practices and policies. And so, this one worries me a little more about its ability to be relevant globally. I mean, this is a fascinating topic, and different, I know, at least within the US, certainly different energy companies have a very strong focus, a very high variable rate to discourage use, but then is that counterproductive for lower income families? And there's a lot of dynamics. I am worried about how applicable this can be to be meaningful information. So any perspective, Will, on the relative ability to globalize this, or is it just going to be a narrative rather than a metric? So.
Yeah, thanks, Kurt. I think that's definitely one of the areas that we'd like to further pursue and try to understand better. Generally, is just the decision usefulness of this and understanding how it's being used in its current state and form. In addition, as you were saying, rate making in of itself, there are different ways to approach that, different within each jurisdiction, their own approaches to that. And so, there is a lot to delve into just within that one topic. And then thinking about this even broader, of course, that is just kind of one slice of the pie, and that there are any number, as you were saying, company practices, policies that may be in place to promote this end use efficiency among customers. And so, that is the even within kind of this narrower scope of it, there is a lot to potentially look into, to dive into, and really trying to understand, what it is, which of those are providing that decision useful information to do it. So, I definitely think that this is an area for staff to consider going forward and continue to research and try to understand some of the more dynamics of that, and which of these different types of mechanisms or approaches may be really driving that decision making.
Yeah, I mean, another piece of the puzzle is how are customers that are partially off the grid treated from a pricing perspective. I know there's current debates these days about whether people that generate their own power are getting a free ride, or are they actually, as Lloyd had mentioned, using their capital to help out the power companies. So it's a very tangled area, and it seems, and I guess I'd be more interested in kind of a landscape description than going for a solution right now, because this one, I think, could be highly different country by country and even state by state. So this one seems like just better understanding how deep a water this is would be useful. And it's certainly a moving picture. Texas, the big debate about did the solar people help us or hurt us, blah, blah, blah. And that really gets into the same thing of end use behavior and whether that, is insightful for company value.
Thanks, Kurt. Yeah, definitely a lot more to consider here, and a lot more consultation and research to do to help us really get a better grasp and handle on what it is, that we may need to pursue with this. So appreciate that. Thanks, Kurt. Are there any other questions or comments that I can address on this one? Okay, well, maybe just to quickly recap. Definitely an understanding here of thinking about the broader scope of this and the decision usefulness that may provide to investors. Thinking much more here about, as Kurt was mentioning, just understanding the landscape a bit better, continuing to do that. Staff will continue to pursue the understanding there and try to provide that analysis to the board at a later stage. So why don't we go ahead and move into our third and final topic today, which is on healthy buildings in the real estate industry. And this is an emerging issue that we've seen here in the topic of healthy buildings. And a healthy building, just to quickly define here, as defined by the World Health Organization, is a space that supports the physical, psychological, and social health and well-being of people. Now, the design and maintenance of buildings can impact tenant health and productivity in a variety of ways, such as through indoor air quality, thermal comfort, and lighting. Now, tenants may design and construct lease spaces according to their operating needs, meaning that their operations can impact the health of those living, working, shopping, or visiting the properties. Now, while the sustainability impacts are often generated by tenant operations and activities, real estate owners have an important role in influencing some of these tenant sustainability impacts. And we're seeing there's a growing body of evidence that suggests that this emerging issue may be of greater significance than is currently represented in the real estate standard. And staff has been monitoring this issue over the past few years, and it was discussed in the industry research brief published in 2016. Now, staff has received market feedback from a few companies and investor or subject matter experts in North America that healthy buildings are an area of this growing significance, as well as additional research that seems to support this. And feedback provided has referenced the ongoing global pandemic and its impact on the industry, in particular around considerations related to building ventilation, which is part of SASB's ongoing monitoring of the impacts connected to COVID-19. Now, this suggests that there may be more to consider than is currently covered in the industry standard with regards to the qualitative disclosure reference in the metric you see here, which includes in the scope of the discussion on a company's approach to measuring, incentivizing, and improving sustainability impacts of tenants related to the impacts of properties on tenant health, including indoor environmental quality. And so, considering this feedback and the growing significance of this issue, what are areas where staff can continue to pursue to research? And so, staff believes that there may be value to conduct research more publicly on these following issues. First one here being to understand sustainability impact, continually seeking to better understand the sustainability impacts associated with healthy buildings, such as the impacts related to indoor air quality, thermal comfort, and lighting. Two, to really understand the drivers of financial impact here. We'll continue to seek to improve understanding and gather evidence on the financial impacts of these healthy buildings on the real estate industry. Here, looking at the financial impacts on, but not really limited to, necessarily to rent prices, asset value, and return on investment. And third, understanding user interests, continue to understand the data that's being used and desired by users to inform decision making. And lastly, understanding the relevant industry certifications and regulations. So continue to build our understanding of these various schemes and regulations in the industry. And so very similarly here, staff would like to ask the same set of questions to the board in terms of their views on the research included in staff's memo, concerns if any of the board may have, and focus going forward on consultations and research.
We're just going to go, we can go in order. I'll start. So, you know, I'm definitely intrigued by the issue. I was very interested as I was reading the materials, and I've certainly seen organizations pop up. I think you hit the nail on the head with some of the areas to continue to research. Obviously, the user interest is going to be important. Obviously, you know, how the financial significance is going to be important too. One area that popped up in the memo was sort of how is this being measured and managed by property owners today, and the data reliability around that would be something that I didn't see explicitly in there, but I'm sure it's implied somewhere. So maybe you could talk a little bit about that.
Yeah, thanks, Mark. You know, definitely due to the growing significance of this, you know, there is more and more data being collected that we're understanding by real estate owners. There may be some considerations too, depending on the size of an organization. So maybe that the larger organizations may be in a better position to collect some of the data that may help inform decision making here. So that will definitely be a consideration that we would want to have going forward. You know, some of the information shared related to really the development of this, you know, in terms of understanding eco-efficiency a number of years back, is that this is, you know, evolving to a point where it's becoming an area where more and more owners are collecting that type of data similarly, but still an area of growing understanding from that respect.
Okay, look forward to learning more. Thanks.
Thanks, Mark.
Well, I think that I might be saying the same thing Mark is saying, but I think as you do your research, my view is some of this healthy building activity is already being reported by a number of companies for their own marketing purposes or whatever. So I think it'd be interesting to look at what is the state of the reporting, and then many times that may be outside of CSR reporting. Sometimes it's in there, and then begin to look at what seem to be the major certifiers or people that they allude to as certifying their buildings, et cetera. So just looking at what's used, because the metric right now is it's a very good quantitative base, request. Tell us about such and such. And if we begin to look at that, I know we've not been in the position to necessarily recommend any particular, organizations as it relates to certification. But I just be interested as you do your research is what is the state of play already in terms of disclosure about this healthy building topic.
Yeah, thanks, Bob. That's something that staff acknowledges and will do going forward here on this. Definitely interesting to understand what the current market state of that is.
Thanks, Will. My question has to do with whether this is actually the right industry, in that how much of the healthy building activity is in the control of the real estate owner versus the tenant. I think you alluded to this in your memo a little bit, but I could see this potentially having similar issues as in the food and agriculture industry, where we found that some of the activities that we were trying to measure were actually, a different part of the supply chain. So is this actually a downstream issue, or is this a material impact that the real estate owners can actually control?
Yeah, thanks, Stephanie. It's a great question, and definitely something that I've heard some feedback on, but I think it's definitely something that we should continue to consider and really, who has that control over it, as you were saying. From understanding with some very initial conversations around this, that there are some elements of that. When you think about building design with ventilation, for example, and how owners can influence that. Definitely an area of consideration there. But you're right, really trying to understand that management of the issue from the owner versus tenant perspective. Wholeheartedly agree, definitely important that we keep that in mind as we go forward with this research.
Great, thanks.
Thanks, Stephanie. Suzanne?
Yeah, and just a brief comment from me. This is not an area of expertise for me, but I have recently been made aware of a benchmarking tool that exists in Europe that's called GRESB. So you might have come across that. Otherwise, I will send it to you, Will. So this is one where private equity property owners definitely are competing amongst themselves to match that benchmarking, and that one does not include, and that's my point, does not include the health dimension. It's only from an environmental energy sanity check. So certainly one that where it could be latched onto, if anything. But that could be an interesting one. I think it is an investor-led, and I think it came out of Luxembourg originally, if I'm not mistaken.
Yeah, thanks, Suzanne. Brian, would you like to maybe speak to the historical interaction with GRESB?
Yeah, sure. I'm glad you brought GRESB up, and I think we can even tie them back to the earlier questions from Mark and Bob and Stephanie. Very, very familiar with the organization, and we've had the ability to engage with them for a number of years here, and they've really been constructive for helping our thinking around the development of the real estate industry standard. Coming back to this issue specifically, a little bit of historical context here is that they actually created what they called, I believe, a pilot module that supplemented their kind of core assessment that was primarily around energy and water. The pilot module was specifically around health and well-being. I think, if I'm not mistaken, they did that starting back in 2016 and 2017. I'm not sure exactly where it stands today, but I do know that they have significantly grown the number of real estate owners who've started to respond to that module. And like you said yourself, Suzanne, that is designed for investors, produce assessments and ratings that are designed to be useful for investors. So that really gives us a lot of, running start for data and insights into the level and nature of investor interest. So I think that does kind of start to tie back to some of the questions that Mark and Bob and even Stephanie raised, just around how this is a quickly developing, quickly maturing issue within the industry. It's come a long way just from my own observations in the last 5 or 6 years, back since we developed the provisional standard. Maybe one other data point, I think something that Bob raised around certifications is there are a couple of increasingly large, sometimes even international certification bodies in this area. The Well Building Institute is a good example. Fitwell is another example. I think there's a more recent standard called Reset. All these are standards designed for buildings to help measure, and standardize or certify health and well-being type impacts. So I'm really glad you raised that, Gresby, Suzanne, influential kind of ratings and assessments organization designed for investors within the industry.
Great. Any other questions or comments on this one? Okay, well, just to quickly recap here, definitely as staff moves forward with this and thinking about this, keeping data reliability or data accessibility, availability in mind as we move forward, considerations around that, really developing a broader understanding of the landscape, the current reporting landscape, the players and actors in this area as well. And then balancing that out and thinking and maintaining and understanding the control element of that in terms of the owner versus tenant relationship, and additionally just continuing to monitor the development of this as we go forward. Oh, Kurt, I see you're here.
Yeah, well, just I guess final 2 cents here. Clearly, this is an evolving space, and looking at the history of LEEDs and those other building measures is insightful. My only concern on this, are we shooting a little ahead of the runner? It's evolving rapidly, but is it solidified enough? And is this one where we try to create a standard only to find that, approach A versus approach B? So I'm just not positive that this is quite fully baked yet. And, I'd have a little caution on, are we shooting at a moving target or a dish that's still being cooked rather than really trying to lock and load on the standards? So just a warning.
Yeah, no, thanks, Kurt. And that's actually a great segue into the final question that I'd like to pose to the board with the last few minutes that we have here, is really, without asking for a prioritization decision, but as Kurt, as you just mentioned, really trying to understand if there are any views here on the prioritization of this set of opportunities. And Kurt, hearing your comments here about, making sure that we understand the landscape, considering that going forward, just want to hear from the board if there are any other thoughts related similar to what Kurt mentioned here with that. Jeff.
Hey, Will. Yeah. So, I think this is it's really interesting stuff. It seems like you've got your finger, kind of on the pulse of what's happening in the sector, identifying some really great opportunities. So I think that's really good. To me, these seem like a mix of really big potential opportunities to improve the standards, and each coming with their little set of persnickety little difficult challenges to overcome, which is probably why there are opportunities for improvement in the standards, and they aren't already just baked into the standards, because there's some challenges there and it's evolving. So, one question that I thought I would ask about is, the extent to which you sort of see this connecting back to human capital and the work that Kelly already kind of previewed for us earlier today and that project.
Yeah, thanks, Jeff. And that's a great question. Definitely something that we're actively considering and trying to think about as we go forward with this. And, the impact on the worker with the building, considering we spend, you know, upwards of 90% of our time inside these structures, is something that we really need to consider. And I think, you know, that really gets into, as we move forward, you know, with the more industry-specific focus of that, is that, you know, we may see this issue come out in other industries depending on the materiality of it. You know, at this point, I you know, can't really say if, you know, it makes sense for us to do a broader scope type project with this, but hopefully as we continue to again dig into this and thinking about health and safety and other issues and the productivity element, the retention element that these buildings have potentially on the workforce is hopefully something that we consider with that industry specific lens.
All right. Thanks, Will. Lloyd?
Well, maybe to build on that point, in terms of setting priorities, I'd be careful about stacked ranking these. These are just really important things against two significant sources of systemic risk, climate change and human capital, both the utilities and real estate sector are heavily impacting both of those. So I don't think it's optional to get involved and really assess what we can do here. And I think we should be thinking in terms of having these be fairly high priority projects. People often underestimate how impactful real estate is on the climate issue, but New York City found a significant percentage of the city's carbon emissions were coming from the built environment, not just from vehicles or power generation. And the built environment is very stable. There's a lot of inertia. So refitting becomes extremely important. So having good disclosure from companies about what they're doing in these areas, I think, is really important. And to the degree we want the standards to align with these sources of systemic risk, I just think it really raises the urgency on these issues, both these sectors, utilities and real estate.
Thanks, Lloyd. No, that's really helpful feedback. I appreciate that, the comments that you provided there.
So how to prioritize is a resounding yes.
Yeah.
from Lloyd.
Exactly.
I'll be more of a curmudgeon, I guess. Lloyd sees a broader view than I do, but I see each of these at a different state of maturity. I agree with Lloyd, they're all very important. Certainly the first one to me is the most substantial and the farthest developed, and it's us catching up with what the world is doing. So we're behind on this one now. You know, I was involved in the original one. And, you know, now that the globe, we've got to encompass and get our arms around the scope of things that are being done that today have a material impact. And there are very thoughtful approaches country by country or state by state. And so to me, that this is a huge contributor to climate, and there's a lot of information out there. As you move down, the issue of end-use efficiency is a fascinating topic, but it's really close to virgin territory as far as us surveying. And so I see this as one where I doubt that we're going to come up with anything dramatic quickly, but it would be wonderful to get more educated or more confused on a higher level anyway. And then the healthy buildings and real estate, I think we've got a pretty good approach for the energy usage anyway. So at least a big piece of this we've got there. Now, maybe we need to globalize to pull in some other standards. And, you know, Brian, you're an expert on that. The only question is this movement towards, you know, fresh air and all the rest of that stable enough that it is a material factor? And it may be over time, there may be a little bit of an over movement here because of the freshness of the COVID. So I think we do have different decisions around three important topics. Number one, I think would be full bore ahead. I think we're behind the world. Two is fascinating, but I would hesitate to know what to do with it. And three, it's an issue of whether the environment is stable enough. So there's two things.
So I just want to be mindful of time. We're running right up against the wire here. So just quickly, if we could go to Elizabeth.
Yeah, I just want to add, the other consideration for me is like the first two standards, I think, if I remember correctly, are already out there, and we're told that they don't fit. And so, and we have people who are reporting against this topic. So we already have people we can speak to about it. And it's also really aligned with our internationalization efforts to address those. So that's how I think about prioritization as well. That's it for me.
Thanks, Elizabeth.
Brian, anything else that you wanna add on this?
Just a very quick comment and follow up to Kurt's comments specifically on that second topic that was discussed. I want to be really careful that we don't interpret your feedback, Kurt, as to say that this isn't not an area to work on, because we know that we have content, specifically metrics in the standard right now that don't work in certain regions and certain jurisdictions. And so I think that it's more around, I'm using maybe a little bit of my own judgment here in interpreting your comments, Kurt, but it's not that this is not something that we should work on because we have a problem in terms of international applicability. It's more around designing the objectives to be more consistent with the concerns that you're expressing here. So we don't need to dive further. I just want to just really be clear that there's content in the standard right now, some that we think is really strong and some that gets great feedback related to the nature of this topic. And there's this very specific concern on the international applicability of the metric.
I agree, Brian. You made me sound more coherent when you restated what I said. Thanks.
Great, thanks. I think not for right now, but would really love to keep hearing from you, Lloyd, on that third topic that Will brought forward, especially. I mean, talking expert investor view and one that knows the real estate industry well. And so, I think that could be a good chance for some follow-up conversations that can help Will out in carrying this work forward. So that's all for me. Thanks, Will and Jeff.
Thanks, Brian.
Thanks, Brian. Oh, Jeff, please.
Anything else, Will, before we wrap?
Just wanted to say thanks so much for the feedback on that question there related to prioritization. Sounds like we'll be in touch and continue to talk about all three of these in the future. So looking forward to many more discussions around these topics as we get a better grasp on the landscape of these. Just wanted to highlight quickly next steps, continue to incorporate this feedback and continue to essentially research and consult on these and come back to the board with more information as we learn more and peel back the layers of these onions a bit more here. So, and then just wanted to provide contact information to any of the observers of today's meeting. If they'd like to get in touch about any of these issues, please feel free to send me an email here. So many thanks to the board for today's session.
Great, thanks, Will. Appreciate that. So we'll go ahead and just wrap up the session. Just to close the meeting, let me say just a couple things. One, and we can go to the next slide. Today's session has been recorded, and so will be available shortly on the SASB webpage under the calendar, the board meeting calendar and archive. So if you didn't catch all of today, or if you want to go back to anything that was said, you're welcome to go back there. And we've got our upcoming meetings in May and July are the nearest term. So look forward to hearing back from the team on that. Brian, was there anything that you wanted to add before we close for the day?
Just a very quick comment. Appreciated the discussions with the board today on human capital, on the conceptual framework and rules of procedure, and on a few of these opportunities within the utilities and real estate industries. Calling back to David's comments at the beginning, the board should expect to hear from staff in the very, very near future on the systemic risk project, namely our proposal around exposure draft and basis for conclusions for a public comment period, and then sometime shortly thereafter hearing from staff on the raw materials sourcing and apparel project, and specifically looking for the board's review and feedback on an exposure draft that's under development and the supporting basis for conclusions as we aim to move towards a public comment period for that project as well. So two kind of concrete actions the board should anticipate in the relatively near term. A lot more to come as we talked about throughout the meeting throughout this year, but those are two near-term actions. Just again, thank you to Jeff and to the full board for the great discussions today.
Thanks, Brian, and thanks to you and to David and to the rest of the team, Callie, Shivani, and Will for everything that they did to prep for the meeting today. Great content, great presentations, and really appreciate all the work that the team does to help with what we're trying to accomplish here. So thank you to everybody, to my fellow board members, and again, a welcome to Suzanne and Mark for their first public board meeting. Hopefully they enjoyed it. And with that, we'll go ahead and close the meeting. So thank you for being here.
Thank you.